Thank you very much. Our director, Madam Lydia Masharia, my brother, Bwana Mainga, also our regulator who is here, Bwana Charles Mashira, the team from Minet, and all the other stakeholders who are in this hall, and especially in the financial services, because I think most of us are in that area. Good morning. God is good, and all the time. Asante sana. I am very pleased to be here this morning, and also to be in Mombasa. It is long since I was in Mombasa, and I was seeing rain at the same time. I thought I would see rain in Nairobi, then I come here to see the sun and the hot weather. But I'm glad that tuko na bara hapa Mombasa sasa, in terms of the weather. I want to thank the organizers, and especially Bwana Daniel for inviting me here. We got in touch, I think, last year, and I confirmed instantly, because some of the things we'll be discussing today, and even the other speakers, the things they'll be highlighting today and tomorrow, there are some of the things that even just sitting to listen, I feel like I'm in holiday. Anything about financial services and money, that is what all of us in this hall do every day when we wake up in the morning. And if there was a way to franchise money, mtu apewe printer ajiprintie, I think it will start with this hall. Because we deal with money directly in what we do in terms of managing money. Just imagine, you wake up in the morning to manage money, meaning you have so much, your problem is not the money, it is how to manage it. I think that's a problem that many people would want to have. I'll give some points, but others I'll also speak of my mind, because I am privileged to have been in the capital markets. I actually opened my first CDS account when I was in first year in campus. And most of the people I was with in KU that time, including our lecturers, I am glad that when I was an intern in a stockbroking firm, I was part and parcel of them opening their first CDS account. And therefore, some of the issues I'll be sharing, I know we are talking about pensions and management, but because I was told there are stakeholders who are beyond that, you allow me to also be a little broad in terms of money and investments, and specifically on the topic that I was given. Before that, because that is my main thing, when the MC was doing the introduction, he rightly mentioned that I am also a servant of the people of Kenya, being MP for Kiharu constituency. And you seated here and other Kenyans, you are my wadosi. And it's important that I take the first 1 minute just to say that I really appreciate the role that I play as Member of Parliament in the National Assembly. And I am glad that this January, among the many things we have done in Kiharu, we are privileged to have also done something that is very important in deepening education in Kenya. Let me start by saying that Kiharu is a very large constituency. Actually, the region I come from, Kiharu could be number 1 or 2 largest constituency in terms of the rural constituency. Because, for example, number of primary schools, we have 112. Day schools, we have 65, day secondary schools. And all our public primary schools, all of them, without exception, all classes, they are well done, hakuna iko na dirisha ya bao ama mlango, hakuna iko na bao inaanguka huku juu kwa roof, and all of them are actually tiled, all our public primary schools. I know some of us in this hall who went to the group of schools, when I say tiles, you are wondering, tiling ni nini sasa hiyo? But our rural schools, I'm sure you know them. Many of us also went through them, including myself, and we know the kind of environment that was then. I am also glad that even in our day secondary schools, we've been able to do so much in terms of the same, but also deepening knowledge through laboratories and other amenities that are important for learning, including computer labs, science labs, and all the others. But what makes my heart very happy today is that we have been able to launch a program called Kiharo Masomo Bora, which is taking care of 12,000 learners, every learner in all our 65-day secondary schools. And every learner in any day secondary school, they are only paying school fees of only 500 per term. And when I say 500, it's not 500 then you pay for food, no. You only pay 500 per term, and you eat in school from Monday to Saturday. And the last Friday of the month, you go back to Christmas and you eat chapati. And you have to forgive some of us from Geshagi, who are brought up there. We used to see chapati over Christmas. So I know that the theory about health and this, that, wacha tulipishe ile hatukukula hiyo wakati. So it makes my heart very, very happy. And I'll mention something about it as I finish, because education is what and the reason, it is the route we have taken to come to Mombasa today. The office you work, the route that you took to that office is education, na ndio pia imekuleta hapa leo. So it is good that we continue to give the same to all the other Kenyans because they deserve it. Now, when we talk about money, for me, I am thinking also about economic growth and the macro side of the economy. Because it is better to talk about pensions management in a country with GDP per capita of 10,000 and above, GDP per capita of $10,000 and above, than to talk about it in a country with maybe GDP per capita of below 1,000. So both our micro companies and the macro parameters, there is no way you can talk about one and leave the other. You can't talk about your business growing in terms of money management, and at the same time you're not talking about economic growth. Those things go hand in hand together. Because a medium-sized pensions management company or fund management company or a hedge fund, a mid-sized company of that nature in the US, let me even paraphrase, an SME manager of money in the US is the global giant in Africa. What would pass as a small micro enterprise in this sector, in South Korea or in the US, is the largest company in Africa in terms of AUM or in terms of turnover. So economic growth is equally important as we talk about our individual companies, including Minet. And I'm saying individual companies because I know Minet also invited other companies. And by the way, I need to congratulate you, because kitambo nilikuwa naona AON, Minet. And in the t-shirts of my team, I used to see AON. The people who support a big team called Manchester United. So, part of the reason why, if you look at all economies in the world, all of them without exception, you start with Netherlands, when it was a superpower. Not too long ago, by the way. Then you come to the UK, how they came in terms of sequence. Then America came in. Now China is voraciously arguing for that position of being the superpower. Now if you look at those, another in between that have grown astronomically over time, you realize one critical thing, that all these economies grow using other people's money. All. Of course, there are other reasons they grow, including technology, innovation, which is part of this discussion. But if you look at the biggest companies, let me, for example, talk about South Korea. All the biggest companies, you go to China. All the biggest companies in the private arena, you go to any other economy, including the emerging ones. You realize that these economies, they actually grow using other people's money. That's why you go to China. Think about any Chinese company you know, any. Think about Tencent. Think about Alibaba, BYD. You realize these companies were small, but they got an attraction. So they invited foreign money to invest in them, either as a venture capital, private equity, or in any other way. So what I'm trying to say is that something called capital flow is very important for any economy. And by the way, when you hear me talk about shares a lot, I talk about it, yes, we benefit when you invest, but more so to open up our capital markets. Because we cannot talk about Kenya growing economically when we are not talking about capital inflows. Because we don't have money in Kenya, just like even China never had money to grow the economy. They had to rely on the selfishness of other people with money to invest in them through equity, in terms of getting equity. BYD, Berkshire Hathaway from America was there. You go to Alibaba, SoftBank, owned by a Japanese but a US one. I think a US citizen. I know you, most of you know him. Son was an investor in Alibaba when it was growing, or when it was starting, or when it was driving. All these companies, there is that element. And we have to be deliberate about opening up our capital markets, because capital markets are the vehicles that then attract the capital inflows in an economy through FDI or through any other method that we can use other people's money to grow. How is that important? Now, BYD is the largest vehicle manufacturer in terms of EVs in the world currently. It has employed over 1 million engineers in China. Can you just imagine? So these people are Chinese, but the money that grew the company is American. That model of an economy must be adopted here in Kenya and in Africa, so that we also have more money to manage. Now, Minet would be managing all those engineers employed by BYD. That's where you come in now. But if they don't have jobs, then you also don't have a job to do. That is why those things are important when we talk about them holistically. The second point, our financial industry. And I'm talking about every banks, insurance companies, stockbrokers and investment banks, pension managers, fund managers, TAs, everyone involved in anything about money and transactions. It is important that we don't remain traditional. We must also be innovative. And innovation, when you are leading a company in whichever area, is in the processes, but also the product. The process at which we give our products, but also innovating in terms of what kind of products that we are giving. And I want to take most of the time here, because I was talking here with our regulator, and it is just startling. And I was wondering, why do financial companies hire actuaries? They hire economists, they hire CPAs, they hire professionals. Why do we need to do that? By the way, Bwana Daniel, why do you need to hire professionals as Minet? Why do you hire them when all your money is in government boards? You don't need anyone. You can actually run Minet with just an accountant, the director, and 2 other people. Because all the money you get, you know where it is going. So you don't need anyone even to do any analysis for you. You get money, you just, kwanza kuna hii board tunapenda sana inaitwa IB, Infrastructure Board. It is tax free, it is nice, it is very high yield, very high. Then gentlemen, why can't we fold our bags and go back home today? Hakuna haja ya conference, because out of 100 shillings we have, over 80 is in government boards. I can see the smiles which are sheepish. Those smiles don't seem very honest. That is the area where we have to think. And if there is any other point I'll give, it is only that one. And don't tell me about regulations and laws. That's why I'm here. That's why the regulator is here. Laws in Kenya are versatile, especially a law that is not entrenched in the constitution, like the regulations that guide the financial industry. They are versatile, they are dynamic, and therefore, they are not cast in stone, they are cast in rubber. You can change. They are actually written on a piece of paper with a pencil. You can rub and write what you want as the practitioners, as the professionals, as the companies. And you have seen it in Kenya. Laws are not static. Laws are dynamic, and especially to take care of the industry and growth. There is no way we are going to unlock our potential as the financial industry in Kenya if we are too lazy to invest 8 shillings out of 10 in government boards. We should actually all be civil servants, because you are investing in government instruments. Then all our fund managers should actually have an office in the National Treasury, and CPK is the agent of the national government. Tuwekewe ka ofisi hapo, bodi kiletwa, tunanunulia tu hapo kwa transformer. Unawaambia hakuna haja ya kupeleka sokoni, tuko hapa, tugawie Minet hii, this insurance company, this other one, this other one, this other one. Then tunaenda nyumbani, tunagoja yield. Then next year, tunagoja another floating of the board. We do the same. What I'm trying to say, and I'm sure you bear with me, and I'm saying it in good faith, show me one economy that grew with the money you hold when they were investing all that money in government instruments. And even if they do, and I'm not saying we don't do that, they do that when they also give sufficient resources to the growth areas. I'm talking to you as a person, and to you as allow me to call you money managers, because we manage money in whichever way we look at it. So, you as an individual, you go and invest in a board, or you fix money in a bank account, meaning you are being given a static, defined, specific percentage and yield. But there is something else also. You have invested with something that has no growth. Government board has no growth. Any instrument that you are assured of the return has no growth, including rent. When you have a flat and you have a government board, you have a T-bill, you have fixed money in the bank account, what you have done is just to park your money, because there is no growth. When you build new by 7 floors, even if you dance outside there singing, you will never get an 8th floor there. It will always be up to 7th floor. The much you can do is to increase rent, which also the market will tame you, because you are not the only one with a flat. When you are investing in a government instrument, when you put in 100 million or 1 billion shillings of your AUM, assets under management. You put up 1 billion shillings. Whatever you do, after the maturity, it is 1 billion shillings. Yes, you have this after 6 months you are paid, but I'm just telling you, there's no growth. And that's why I'm usually a proponent of shares. For this one reason. If I buy shares of a bank when it is a microfinance, like Equity did when it was a housing building society, there is growth. I have bought a cow, which can get a calf, and a calf can get a calf, and a calf, and a calf again, and I have a herd. Because if you buy Total Kenya today, Total has growth. It can open many stations. It can grow. The people who wake up in the morning to go to Total Kenya, they go there to grow. He has to manage what they already have, but imagine they have no ceiling. But in a government instrument, just like fixing money, you already have a brick ceiling. Not a glass one, a brick one. There is nothing you can do to grow that money. It is cast in stone. And that's why I am calling upon us, economically speaking, but also in terms of investments. What we must achieve from this conference this January is that we must be innovative. And we cannot innovate when we want assurances. If you wanted an assurance you reach in Mombasa, there was no way of leaving Nairobi because you are using an aeroplane and you are not the pilot. You are using SGR and you are not the one on the steering wheel. You are using a bus. You actually didn't know how the road is. So you left hoping utafika. Even in investments, the reason why we remain below the radar, we remain below the ceiling, is because we want assurances. No, me, I want LAD. You know LAD, it can't get lost. I'll keep seeing it, DOE. No, I want a government board. You know, governments, they never go bankrupt. So I have assurance. I'm fixing money in the bank because I am assured. I am assuring my investors of a return. Assurance and innovation, they don't go in one sentence. You either choose assurance and then you remain where you are, now tusubue from there, where ukae hivyo venye uko. Or you choose then progress, and progress is innovation, and the reason why then you need a professional to check at the options. You don't need a professional to tell you to fix money or to buy T-bills or government boards. You don't need. You can just buy because, in quote, you are assured. That is where now everyone in this all comes in, to evaluate options. Because you are innovating already, you have opened up your mind, and you're not opening up your mind just to be seen. You know, there are things we do to be seen, but there are other things we do to do. To be seen is, you have 1 billion shillings you are investing for your people, then you take up 1%, which is not going to government boards. Then you say, you know, I'm diversifying. Diversifying 1 shilling from 100. Let me start by telling you one thing, those of us who are here. Those things you call assurances, they are not assurances. There is a book I've been reading, if you get, you can buy it, called The Principles by Ray Dalio. He's the biggest hedge fund manager in the world, Ray Dalio. And he has done a lot of research, deep. And because he has money, he's a billionaire, so I'm using his knowledge now to come here also to talk. What do I mean? I don't have to do the research he has done. Because he's a billionaire in dollar terms and I'm not, I have made him, mi nimekaa nyuma, akatumia bilioni zake, akafanya research, so I'm just coming in to consume. Very well refined book. It's big though. Now, he talks about the sequences of how global economies have been, which It's part of the speech, by the way, guys. Don't think that I have other points later. This is the speech I'm giving you, eh? So he gives the scenarios of how economies have evolved ever since, centuries. About, for example, debt. About how credit brings debt. You know, credit and debt are two separate things. Credit comes first, and then debt, and then default, and then a crisis, and then a rebirth. In the world, it is always exactly like that. Even the markets which you operate in, and in the markets, I don't mean stock markets alone. Markets, I mean anywhere you go to invest. Those are the markets. Real estate is a market. Stock market is a market. Boats is a market. I mean, across. Markets are strikingly cyclical. What I mean, predictable. So, for example, we had a financial crisis in 2007, 2008. Anyone who does, actuaries who are here, also economists, you can always predict by looking at the parameters when we are likely to have another financial crisis. The stock market in Kenya, the way it is now, you can always predict it's now bullish. It is likely to be bullish maybe up to end of 2026. But you can almost predict that by the first quarter of next year, it will not be bullish. Because there are parameters you can attach and you get the answer pale mwisho. You know the way you mix uga ya chapati, mafuta, na maji, unafanya hivi maneno, hivi, chapati inakuwa. There is a sequence, but there are also ingredients. Even in economics, how the economies behave. If you put in ingredients in your formula, you can always tell where you are headed. What am I trying to say? Those things you call assured, they are not assured. And I want to tell you here, and I'm not trying to instill fear onto anyone. Do you sit down in your office and ask yourself, you've been investing in government boards, and you are now investing more than any other time, because Kenya is borrowing more than any other time in history. Even in your books, you see in terms of quantum, you are buying more boats than you are buying before. You are buying government instruments in terms of amount than there was before. There was more on offer than, there is more on offer now than has ever been. Do you sit down to ask yourself, hiki tu ni nini munafanyaga? In terms of, okay, we call it investing. Do you think buying T-bills and bonds is investing? It is lending to government. So it is a debt. Government is taking credit, so it is accumulating debt. So in your mind, do you think that sequence is eternal? That has no end. Can you, when you go back to the office, can you just go and check your figures correctly, and then you tell me, is it possible for an economy to continue borrowing more than it borrowed yesterday, and it doesn't have a reset? It will not be possible. I can guarantee you that. Now, if you are spending half of our revenues as a country to pay the interest rates, you know the money now you call profit when you invest in government instruments. That is also an expense on the other side of government called interest rate payment. So you want to tell me, now we are spending half of all the revenues Kenya is collecting to pay interest rates, and we all here now in Mombasa as professionals to think we can do that for the next 5 years without a reset. It will not happen. It will not happen, I can guarantee you. That we can grow the economy at 4.9%, but also grow our debt at a higher percentage, and therefore pay interest rate higher than we have ever paid, and there is no reset. If you just check the sequence of economies, that will not be sustainable. What am I trying to tell you? Keep investing there, in terms of quote investing, but there will be a reset at some point. There is a time Ghana, we are not talking about centuries ago, we are talking about 2 years ago, Ghana. The government called people, I'm using figurative language, they call people in a hall like this, the way we have come. Oh, I want to meet all the banks, I want to meet all the insurance companies. They came, the MDs. I also want to meet pensioners. Not even the people who manage their money, even them, their representatives. Do you know what the government said? Everyone is taking a haircut of 30% of the principal amount. I'm not saying about a barber shop, haircut. A financial haircut. So where do you go? Oh, naenda kotini. Okay, you go to the court, you give whatever orders. Go and auction government. Okay, so utagoja GK vehicle uchukue ama utafanya nini? So these things I'm talking about is both the macro, but also talking to you who are here. This tendency, we can revisit it sometime later. Because if we don't slow down, we'll definitely, as today is Wednesday, Thursday. As today is Thursday, we'll have a reset. So there's nothing assured. When there is a reset, for example, in government instruments, do you know what that means? It means the banks also have a reset. Because even most of the assets are also in government instruments. So how do you invest your money? There is some money you have fixed as you wait to see what to do with it. There is some other money in the government instruments. Of course, there is a small segment in stocks. There is another one in properties. Na ingekuwa si regulator ya property hata ndiye ingekuwa juu zaidi. You guys would be owning all the land in Kenya. Maybe kama sio regulator kukaza kidogo. So, when there is a reset in government instruments, it hits you direct. But it also hits you indirect with the money in the bank. Because the sequence continues. Also the bank comes and tells you, I know you deposited this money here, but simesikia vile kumesemekana, I also owe you this much. The sequence, that's how it goes. And I am hoping Kenya will not reach there. Unfortunately, if we become more excited because there is a lot of domestic money, there is so much domestic money now that people are paying more in NSSF and all the other funds. So there is so much money in domestic market. And therefore, inatusubua kupea government haraka haraka. You are not giving, you are neither investing, you are actually lending. And you are not lending to somebody who is going to invest. You are lending to somebody who is spending. If the government of Kenya does not borrow money, go to the market for 2 months, can it operate? I can actually challenge the government. For us to know our economy is stable, they don't go to the markets for 2 months only, or 3. To ask for TPs or both. Then we see whether they'll pay salaries. Not build roads, paying salaries. Because if you collect money, half is going to you as profits in terms of interest. The other half is not even enough to pay salaries. So what I'm trying to say is that as you do your math in the office, there is nothing certain. What has been certain has been proven not to be certain in perpetuity. The second thing, I had two important things, that one and this other one. The other ones I don't think they are too important. I'm still on innovation. The companies you admire here in this hall at a personal individual level. Berkshire Hathaway, Bridgewater, BlackRock, Blackstone. I'm talking about the biggest companies in the world that manage money. Where do they get most of their profits? Take Berkshire Hathaway. Because it's a model I would really beseech all of us to think how we can model our money around there. We invest money in stocks, but we all invest money in stocks here passively.
How can you be having billions of dollars in AUM and you are buying shares passively? I wonder if a normal Kenyan, a retail investor buys 2 million shares, 100 shares, 10,000 shares in KCB, and you have billions of money buying KCB shares as a passive investor, do you think that is too wise? Then what is the leverage you have in having so much money? It means you are not using your money as a muscle when you are investing. I challenge us. Our capital market now and our markets have opportunities that are so glaring. But the people with the money must unlock that money to stop being passive investors. I think you are investing for dividends. Dividends is for us as individuals. You guys must not invest for dividends. You must invest for growth. And for you to invest for growth, you must invest to get a seat in the decision making of those companies. Because you have the muscle. And you realize some of these companies, and especially those which have government association in them, they also need your brain to make them grow. Take Berkshire Hathaway. Their biggest money they have made is from where? And I'm still on innovation, guys. I'm still on innovation. Their money is in investing in companies. You know, they are the insurance company, I think, is the second or largest in America. That is their insurance company, not a passive investor. Their insurance company. Then they have hundreds of companies. When Warren Buffett meets his CEOs, he meets them like at this conference. Can you imagine all guys here? Every person is a CEO of a company. Let's say I'm Warren Buffett, I'm saying that. Now I'm speaking to you as CEOs of my companies, all of you. At a point where, how is my Ndindi doing? Not passive ownership. That is the level we have to go. Every person in Kenya managing money, for our capital markets to mature, we must stop this thing of investing passively and invest heavily. And investing heavily includes going to negotiate when you are investing. If, for example, you have 25 billion shillings you want to invest, and you want to invest in Equity Bank, don't go to the market. Why are you going to the market? When are you going to have 25 billion worth of shares buying from the market? Always the banks need money. Always. You can rest assured. Just have tea with James Mwangi. I mean, some of you may combine forces and form a consortium. Go and have lunch with Mwangi. Tell him we have 25 billion here. We want to invest in your company. They'll create shares for you, and you'll pump in your money, and you'll get a board membership, and you become part of Equity Bank, including growth of it. Am I speaking? I'm an Yogek Swahili. If you look at Berkshire Hathaway, you'll never see they throw money there to chance. If you have the might, which you have in this room, stop kuja kwa market kusubua small shareholders like us. Go and talk to the companies themselves. They create shares. Do you know who is the largest investor in Equity Bank? Anyone with an idea? Founders, no. I'm talking about the investor. Actually, he's the #1 shareholder. Anyone with an idea? Okay. Who is the largest investor in Britain? Anyone with an idea? Britain. Or one of them. Any investor you know in Britain, any shareholder you know within Britain. Yes, sir. Who? Monga Kahara, yes, an individual. That's good, but I would want to get a fund, a company, so to say, an organization. Yes? Very good. African Invest is a PE fund. Now, did they have to come to the market to buy shares? Did they? You could remember when Equity grew, when it actually now started being a local bank. Some of you, do you remember a time where or when Herios Capital invested in Equity Bank? Herios Capital is also a PE fund. Did they come to the market to buy? They didn't. What I'm trying to say, we all have the money to play in that league in this hall. Let's use our might for the benefit of growth of these companies and the growth of our money. And how do we do it? And why do we do it? If you look at even in terms of individuals and companies who have grown, take a person like Peter Thiel in the US. He invested $500,000 only. $500,000 in Facebook at the early stage. Okay, he sold along the way. If he never sold his equity, he had a 10% in Meta, Facebook. The current value as we talk today, 10% of Facebook would be around 150 billion US dollars. Now, I'm provoking ourselves here. Even as you invest in those assured things, which we may have realized they are not as assured as we think, can't we also have a significant amount of money where we are funding growth companies, antelopes, so that even if you fund in 10 and only 5 works, they give you profit more than all the money you have in T-bills and boats. And don't tell me about law. That's why the regulator is here to tell you laws are dynamic. Take a company called Apple, Iyasimu. There's a guy who was called Mike Makula. I was reading the other day the biography of the former CEO of Apple. Mike Makula at some point, he invested only 250 million, not 250 million, 250,000 US dollars. By the time Apple was listing, he had a 14% stake. 14. We are talking about a company that has been founded in our generation. If he never sold, he has sold some, he still retains some. That stake could be worth 500 billion US dollars. Even if we invested that money in the best government instrument in the world, let's say he invested 100% of that money, and 100 times of it, even to increase the quantum, the gain on this other side is very high. What I'm trying to say is, we must also unlock our money by putting it in anything that can grow. You'd rather than you buy a mango tree, it grows and bears fruits. Anything with life. These static assured instruments have no life. I gave you about BYD. Berkshire Hathaway invested in 2008. It invested 230 million US dollars. It's quite some money for a 10% stake. They sold last year, the final batch. They got 30 times their money. 30 times. Their money increased by 30 times. I'm saying not 30%, 30 times. Yes, as we do all those other things which are assured, can we also focus on something that can grow? That's my point. And in the market, because I would want us to take this point home. Currently, there is a spree of privatizations because, as you know, the government needs all the money that can be gotten. You people in this hall with the money, and you have money for other people, so no one will accuse you of buying a government asset for your own sake. Are you thinking about it? Have you gone through the list of anything that could be sold? Because we saw now the government, you can even give the price and they sell you without even anything much. Go through the list, you tell them, I also want to buy this. What I'm trying to say is, there are many companies you can buy in the market, listed and unlisted. If I had the kind of money you have, we are just sharing. If I had the money you have, I would be controlling Kenyan. Why? I would have checked. Kenyan market capitalization is 60 billion shillings. 60 billion. And it's after this year has gone up by 100% in 1 year. So it was 15. It was 30 billion last year by June. I would have gone, invested in Kenyan. I would be having 2 board seats in Kenyan and driving the growth of Kenyan. Why? Because number one, those things you are calling assured, the dividend alone in Kenyan, the dividend yield, is higher than the yield of T-bill. So let's say I don't even need anything else, dividend yield. It compensates for this as a lazy decision of T-bill and T-board. But that's not even the point you'd be investing there. 60 billion shillings is the worth of a company producing over 25, around 2,000 megawatts. The professional in your office could have sampled several other markets. Sample Nigeria, a company like Kenyan. One is called Transcorp, Geregu Power. What do you realize there? Kenyan was 60 billion, producing over 2,000 megawatts. Transcorp, just here in Nigeria, still listed like Kenyan, is worth the 200 billion, but producing half of Kenyan. You don't need any other analysis. Just look now at the debt. You realize they have no debt ya kukustua. You look at the assets. You realize they have $500 billion worth of assets. $500 billion worth of assets. But you'll be buying a company for 60 billion shillings. That's how you umejifanya hapo mnyenyekevu sana. I am very passionate about these things, so when I talk about them and you see like shouting, is because I need to shout. Hii kampuni tunaitaka Kenya Power. If I had your money, na wekelea na nunua yote. Why? Number one, you buy a utility company. And we are not talking about things that are impossible for the people in this hall. You have the money to buy it tomorrow, yote. You are talking about a company, if you buy it today, you'll pay 29 billion, yote ikue yako. But the profit per annum, the recent one, was 24 billion. I know you think I'm wrong. No, I am right. Have you ever seen such a company? To buy it today, you'll buy it for 29 billion. And you now be saying, Lydia Masharia, yule owner wa Kenya Power. Yote. Yani anakuangalia anasema, huyu tutawekea stima huyu. On a light note. So, Berkshire Hathaway of Kenya would be doing those kind of things. And you can create, whether you're a pension manager or what, you can create a number of investments that can do that. And you don't put not too much of your portfolio in terms of size, percentage. A small one will do others. You'll buy a company for 29 billion, which is making for you 24 billion in only 1 year as net profit. And given the inefficiencies of it being run as a parastatal. Can you just imagine? If you bought, you are now running it, you have sufficient board membership, you just go there and say, from tomorrow, this company is no longer buying transformers. We will list people where customers will be buying transformers for themselves directly. You go there because you are controlling it, because you are the Berkshire Hathaway of Kenya by that time. You say, We are the new owners. We are no longer going to be buying poles. We will list pole companies. So if you want a connection, you go buy directly. What do I mean? You will stop now Kenya Power selling to customers a pole at 15,000, which them themselves, they buy at half the price. They'll give you the permission to go and buy it directly. And then you remove all that procurement manenos from Kenya Power. It goes directly to the market. The company becomes so efficient, you'll make 50 billion in your first year as the owner. You return all your money in 1 year. And then hingine, unaokota tu for free. I would have gone to the market if I had the kind of money you have. I would be in the market. By the way, currently in Kenya, you don't need to buy a company off the market. All companies off the market are more expensive than the one in the market. That is why a share of Family Bank is more expensive than KCB if you compute. Because they are not listed. They'll be listing, yes. But the shares of unlisted companies now are more expensive because our market has been bearish for a long time. So even when it is bullish for a few months, it is still bearish. I would have gone to a company like Diamond Trust Bank. I would have gone to talk to Aga Khan if I were you. Tell them, we can make a deal. Why? Because this is a company, a bank, a full-fledged bank, a regional bank, not even Kenyan, with core capital of 100 billion shillings. Core capital, or shareholders' funds, over 100 billion shillings. But in the market, you are buying it at that price. That. Their dividend yield is the same money you get from T-bills. Na hizo vitu zote hujahesabu capital gains which you are likely to get. So you go, the same money you are to put to T-bills this month, pereka huko, patafuta the owners, weka huko, pata ka stake ya 10%. The dividend alone will compensate for that other decision. But that's not even the reason you are investing. You'll be investing for the upside of capital gains and the growth of the company. You pump in, let's say, 10 billion there, you get a sizable stake. That money is used to grow and grow and grow the company further and further. And therefore, you're already owning something with life, not the dormant, static investments that are assured. I'm almost finishing. Insights. Innovation. Insights. Every person in this hall is a decision maker. Jeff Bezos usually says that he's very, very stubborn in vision, but flexible in details. A decision maker must be insightful, looking forward, so that you exactly know I'm going there, and your eyes are fixed there. I'm looking at the time. Within 2 minutes, I should be out of here. So, insights. All decision makers who run various companies here, of course, it's your work to set the goals of the company. And there are things we are told since we were in primary school. Set goals, at the smart, specific, measurable. The goals of a CEO or a fund manager must be different now. Of course, you have assets under management as your goal, the threshold. But can we expand further? Can we expand further too? Must we actually all be competitors? How many fund managers do you actually need in Kenya? Fund managers, I mean, I have put everyone who deals with money together. How many do we actually need? We need many, yes. But is it possible we have some few major ones which can colonize other regions? Is that possible? Because when you have so much money at the management, you see, like I usually see at the BlackRock announces to open an office in Nairobi. They have not yet opened. It becomes news on Bloomberg. even thinking they are opening an office in Nairobi. And you are here, no one even reports you. Bloomberg have never known you are here. Because of size and scale. So part of the goal setting is to know, many times even in politics we are trapped, just as in business, in something called prisoner's dilemma. Prisoner's dilemma is an analogy given in prison. Even in areas where people should collaborate, even when it makes all sense for people to collaborate and talk in one voice, even after analysis have shown collaboration is better, you still want to finish the other person even before you collaborate. You say, yes, we may collaborate, but let me finish him first. Then a vicious war starts. Vicious war starts, you get finished, all of you. So there are some goal setting that may involve, okay, this guy, we fear them. They are very good in this thing we are doing, and we are competitors. Maybe it makes sense for us to collaborate other than compete. Maybe we can end up making more money, spending less in advertisement and marketing, spending less in cutthroat margin competition. Maybe it's your business to think about that. Lastly, in terms of strategic governance, I would only highlight 2 points there. Of course, being strategic is your business. Strategic, thinking macro. There are some things you must not delegate, even as the boss. The sequence I talked about. Because the person you have employed in your office is a fresh graduate. They have worked for 2 years. It's your business to know there was a financial crisis in 2008, and there was a tech bubble a few years before that, and it's your business to know we are likely to get one soon. That sequencing saves you a lot of investing money. There is something, I am mentioning Berkshire Hathaway a lot because I read about them, Charlie Munger and Warren Buffett. I read about them a lot. So around 2007, 2008, how was it? They had piled billions and billions of dollars. And the market was deriding them. The markets thought they were so clever, the markets. And this was this, how I live. So the guys who are piling money, they could go to AGM. The guys rise up, they could seek for a chance to speak. Why are you putting so much money in cash? Why can't you invest in this and that? They were not being pushed. So, they had already done the analysis given the previous years, and they knew somewhere here, from 2006, they were already piling money. But you are piling money when the market is so bullish, because the crash always comes after a bullish market. There is no crash when there is a bear market. Crash only comes when it is bullish. So it means you are already losing some opportunity cost. And the people would wonder, why are you not investing? The shares are going up too much. 2007, 2008, the market crashed. Those wazes took up companies for free. They were being begged. A bank like Bank of America, which had to merge with Merrill Lynch, they were begging waze. Do you know why they were begging them? Just to invest even $1, because the market would have confidence by Warren Buffett investing even $1 in them. So they invested, got huge stakes in many companies. They were walikuwa wanazifagia hivi. So that strategic decision making have to be with the bosses of the firms who are here. Even those guys, they never, if you go to the Berkshire Hathaway's office, they don't have actually any expert. Those two others used to be the experts. One is late. The other one is, actually, I think he retired this December. Work on a 12 staff. Company worth more than $1 trillion US. With more than 200 companies. I'm not saying you get sacked, you guys, eh? What I'm saying is that the owners of the companies, the leaders, they have their role to play in strategic decision making. Last one is emulation. There is something I've seen economists and also companies. Emulation is, me as a small-time shareholder, I don't need to look at global trends. I see what Warren Buffett is saying, what Ray Dalio is saying about global markets. And then I polish up. Nawekelea tu yangu kidogo napaka rangi. So najua dunia inaenda hivi economically. Because they have money more than me to invest in in quotes R&D, in their formulations of whatever they need to know the predictions. So some of the money you spend, you don't need actually to spend, you emulate. Even economists do that. For Kenya to grow, we don't just wake up and say, we want a Kenyan model. No. We can look at models that may work, that are close by. Either inakaa kama Kenya. So that you don't have to experiment too much. For example, one experimentation I'll never do, people in this hall. From today, I would go and take stakes in the NSC without thinking. Why? Because there is no way you are going to get a cheaper company outside than inside the market. Because the market has been bearish. And it's a buyer's market. When it's a buyer's market, why are you looking to buy something outside? Do you know why I'm saying it's a buyer's market as I finish? Some people are asking me, tell us, wewe unanunua KPC? Nimeulizwa na watu wengi hivyo sana. Unanunua zile pipeline? I can't tell you what to do. Because markets, even your own stockbroker cannot tell you what to buy. Because they can tell you in good faith, and then the market misbehaves. Because the markets are not just fundamental. But I want you to take on this. I'm just trying to make a point on why listed companies are so cheap. Let me use Kenya Pipeline. It's not yet listed. Iweke hapa. Do you know anyone with an idea it's valued at how much? At the IPO valuation? The whole company. Even if mnaweza gogo hata nyinyi saa ingine mnaniangusha kiasi. How much? 160 what? Just Google. There's a point I want us to make. Nataka to make collectively. Madam Director, please come help me. There's a point I want to demonstrate. Unajua nimekuwa nikijiongelesha hapa. There's something I want to push in kama conversation. You see the conversation mutakuwa nayo jioni. I want us now to stop now the lecture. We come to a conversation. Please come help me. My brother, come kuja na hiyo karatasi. Tafadhali nisaidie. Karamu na hiyo karatasi, tusaidiane watatu hapa. Hii mambo hakuna haja ya kuongea ati I'm looking down hapa nikiwa juu. Rather, let's converse so that the point can get home. And my point is, kuja, nataka evidence, nataka kukuwe na witness. Haya, andika Kenya KPC. Hata nyi andikeni. I want you to refer, this is my last point anyway. Ya mwisho simuandike tu tafadhali hata kama. You know nowadays tunasemanga iko YouTube, I'll go to rewatch. But there's a point I want us to make so that we can use it. Do you know what I want us guys? There are low-lying fruits in the NSC. Let's exhaust them as a country so that we start thinking. You know why? Me, I can't think. You tell me, start a new company. Why do I need to start a new company when I'm getting cheap companies in the NSC? Why? So, companies grow when you exhaust low-lying fruits. China grew by first exhausting labor. Labor was so abundant. So, because it was almost free to employ people, labor-intensive industries, low-lying fruits, unamalizana. After you finish, you go to skill-based. They went to skill-based. Wakamalizana. Because of barriers of entry also. Capital-intensive because they now were having some money. So you broke other people based on the might of capital you have. then you grow. Then you plow back the same process from this capital to become technology intensive. So if the economy grows by picking low-lying fruits, even us here in Kenya will grow by first of all picking low-lying fruits. Tumalizane nazo. The low-lying fruit in Kenya now is the NSC, for you guys seated here. Not passive. Become huge participants, huge. Why are we having World Bank investing money in our private companies when you are oversubscribing our T-bills? How? KPC. Na nataka tuulizane maswali, so you can use Google also. 163. Make a column. Moja uiweke valuation. The first column, call it valuation. The second column, call it profit. And the last column, call it PE ratio. It's the simplest way of measuring an investment. It must not be a jargon in this. It can be a jargon elsewhere, but not here. PE ratio, price over earning ratio. And the other way to measure PE ratio is net profit, capitalization divided by net profit. That's the other way of measuring PE ratio. Haya, Madam Director, kuja ukue kama witness. Na hii tunafanya wote, so that you go make your own judgment, because I don't want to talk about whether to buy or not. Because I'm a politician, but on the other side, I'm an investor. So and as a politician, I have a different view from the one I have as an investor. So that's why I can't tell you. I am going to give you the analysis. Haya. Mumeweka column 1, 163. 163.6. That is the valuation. So, see, as you don't look at the share price. That's something I always see when I tell somebody, oh, buy DTB. Share inatoka 115. Nitanunua hii, ingine inatoka 3 shillings. But you have not even looked at how many shares are listed. You know, capitalization is the price times the number of shares listed. So don't just look at the price. When you're evaluating a company, look at it like you are buying the whole of it. Because a share is a proportion of that company. Higher. The reason I'll be using these 4 companies, I'll use 4, is because when Kenya Pipeline is listed, it will be under a segment called energy segment in the NSC. NSC iko na segments: automobiles, agriculture, banking, insurance, kuna energy. So kwa hiyo energy, itakuwa hii ikikuwa listed. The second one will be umeme ya Uganda. The other one will be Kenya Power. The other one will be Kengen, and the other one will be Total. So I'll not use umeme, I'll use the Kenyan ones. Haya. KPC tumeandika 163.6. What is their last profit? We will not take the last. We will take the highest. The last is not the highest. The highest they have ever made, according to the books I've seen, is 12 billion bottom line. That's the highest profit they have ever made. Last year was lesser. Yes, 12 is the highest they have ever made. What I have seen in the books. But of course, those people who've been in the market know the dynamics. They are not likely to. I am waiting to see half-year results. I am certain they will release half-year results of around 10 because there is an IPO. Just write somewhere, because some of these things I'm saying is the predictions we do in the market when even you do them. I'm sure they will release the first half, quarter was around 5. The second half, quarter was around 5. So, but I don't want us to use there. I want us to use 12. But I'm just telling you, when there is an IPO, part of that IPO comes with, lazima upake kampuni rangi kiasi. So they are likely to announce half-year profit of 10. And they are actually also likely to be oversubscribed. Because the share, it started the IPO on 17th. If they stopped on 17th evening, it was already oversubscribed. Not by Kenyans. The allocation done on the paper. I'm telling you the facts. Just look at the results after the announcement. Most all companies will have been made to buy the shares. Not they will have bought, they will have been made. Just look at, you know, when you live in Kenya, you don't struggle to see trades. I can tell you from Kenya, the second investor will be a Ugandan, but that Ugandan will be Kenyan. Si result iko in a month's time, utaniambia. You can be assured the biggest applicants in terms of quantum will be all marketers. Some who you have never known, they are actually all marketers. But the number two from Kenya will be Ugandan. Another line, it will be a Kenyan Ugandan. And it will be a company. Okay. Wacha tusiongee siasa leo. Kenya Power. Valuation. Valuation. Just Google there. Saki kutumia my words. Just go, somebody to Google for me, Kenya Power market cap today. You know market cap, I hope you know market cap. The valuation of the company using the share prices. That's why you heard me talk about this Safaricom issue the other day, because it is just too grossly incompetent to talk about markets. And you will see just now, when you are valuing a company and selling a big stake. Somebody Google for me, Kenya Power market cap. Yeah? 28. Decimal water tuache. 28. Can you Google for me there? Kenya Power profits in 2025. In 2020, the recent one is 2020. Yes, 2025, because they end their financial year in June. Just Google for me. I want you to, and please write. And I'm saying this because even this whole, I've already been asked by somebody, do I buy this share? No. I want you to do it for yourself, right? 24B. Hata tuachane na decimal points. So, how do you calculate P ratio ndio tuende tukimaliza yote? This is P ratio. You can just do valuation divide by earnings, which is net. So hii ya kwanza divide 164 divide by 12. I've used the highest. Ile wametumia juzi is even lower. 164 divide by 12. 13.6. That's the highest ever. I'm reminding you, I'm not using the, ile walitumia ni lower. It's like half of this. It's 13, yes. Hii ya kwanza tumepata 13 P ratio. Haya, power. Divide 28 divide by 24. No, 1.2. Haya. Kengen, listen here. Kengen is one of the best dividend payers because they pay 75% of their earnings. But I don't want us to focus on dividends. We focus on the company. Can you Google for me market cap of Kengen? It's around 63 billion. Weka 63. Google for me Kengen profit 2025. It's around 10. But Google. 10.5. Higher. Divide for me 63 divided by 10.5. Na muandike pahali. Hii kitu nataka muende nayo nyumbani. 6. Let's go to Total Kenya. The market cap should be around 6.7. But check. Should be 6.7, but check. Total Kenya market cap. Total Energies. Market cap. It's around 6.7, I'm sure. Anyone who has gotten? Yeah, 6.7. Higher profit, just check, Total Kenya half-year profit 2025. Half year. Judio imetoka. Full year itatoka maybe next month. Must be about 1.1? 1.1. So times 2? 2.2. So 2.2. Divide 6.7, divide by 2.2. 3. 3, eh? Madam Director, I request, for this question I'm going to ask, the company to give just a gift, if hata kama ni hika booklet, to the person who will answer. Anything, just to remember. Can anyone from the audience who was writing, please, just come and tell me what you have, after writing, what comes to your mind? You don't come, even, you can say it there. Yes, this a lady here. Let's get like 2. And any other, after writing, what comes to your mind after you write?
For me, I think I would buy Kenya Power.
Please rise,
Okay.
so that you help us.
I'd put a lot of my money in Kenya Power. The reason being, it would only take me 1 year to recover my money. But for KPC, it would take me approximately 14 years to recover my investment.
Makofi tafadhali. I am happy to know that people are listening. Any other person, even if you repeat what you have, in other words. You know mtu anasema, you know you guys, unaona kabuka mtu anasema, just to add on to that. Yes.
Hata siwezi anguka mtihani, I repeat the previous speaker's sentiments.
Can also somebody tell us about even the others? You have mentioned the 2 extremes. You can mention what you have learned about the others. Anyone who wrote that graph, what you have learned and what comes to your mind? Iko, my brother there. My brother there. I want 2 people and somebody else, wa mwisho. Just 2 people. This is part of reinforcing the lesson. The last person in Nani. If you get a lady, my brother there. The very last, a lady. There is a lady next there. Okay, let's go. And you can write so that other people may have attention. Unaamuka tu ukisema.
The P ratio 13.6 for Kenya Pipeline does present a risk of overvaluation. It could be overpriced. So there's that risk element that maybe the share price could be overvalued. And yeah, that's my take on that.
Okay, my take on this, Total is 4 times better than KPC.
Thank you. What I gather is that the listed companies appear better value for money. KPC, not as good as the listed companies. Thank you.
Any other person? Thank you very much. Let's clap for them. Please, you may sit. Hata nikimalizia hapo, nimesema kitu? Si nimenyamaza tu. So what I mean, many times we rely on people, on professionals to guide our money. But some of the decisions we need to make when you are investing are too, can you just imagine you never read in a book? They are too close by. You just went on your phone and all the relevant information you needed, you have it. So, markets also have other things. You may not know what has been hidden there. So that's why it's difficult to tell somebody, as a politician I may talk, but this is not the forum. But as an investor, you have talked. You get what I mean? So, and in all the other, when you go to banking, you look at something called core capital versus the valuation. That's how you value, when you're buying a bank stock, you look at the core capital or shareholders' funds, because core capital applies to the bank, which is only operating in Kenya. But most of the Kenyan banks are operating regionally, and they have subsidiaries. So shareholders' funds also captures subsidiaries. You know, core capital is a statutory requirement to list. But shareholders' funds also now incorporates whether you are a bank, the Ugandan one, the Tanzanian one, and the rest. So always look at the percentage between the valuation and the core capital. As I finish, very lastly, I also want to plead to Kenyans, and I want to plead to the government. When we give our considered opinion, we are giving it for Kenya to benefit. I still hold, because the truth, you cannot rub it. The truth will remain to be the truth. The valuation of Safaricom at 34 shillings is grossly undervalued, as we have seen in our computation here today. We have seen here that Kenya Power is valued at 28 billion. Even at that, double that, which is 56 billion. Do we think government can sell Kenya Power for 56 billion? They can't. Yet it's double price of what the market is trading. So I'm also appealing that all of us, let us purpose to list, to put up Safaricom transaction in an international bid. Because people will compete for our shares, which is a 15% stake. And you can be guaranteed the 2 or 4 billion we are getting, we are going to get more than 350 billion from other people bidding for Safaricom shares. Because our market has been undervalued. And when it is undervalued, it is not the right parameter to measure the share you own. It is the right one to measure the share you want to buy, not the share you want to sell. And you have seen in the market, yesterday night, you saw that Nedbank from South Africa is buying NCBA. It is buying NCBA at a price of around 102 shillings because it's 1.24 to book value. It's about 1.4 to book value. So the share was trading at below 70 before any news of a takeover came up. But now the company, in terms of the valuation at which Nedbank is buying NCBA, is more than 50% of that price. Meaning the market was not valuing NCBA the way it ought. And that's why there is already a transaction of the market at a much higher price. There is a transaction happening in Kenya now of a company called EABL. The IGO is selling to Asahi of Japan. The share price today, as you can check on the internet, of EABL is 244 shillings. 244. Yet, the IGO and Asahi, they are transacting the same share at 590 shillings. 590. How can we then be so incompetent as Kenya that we are selling up our government assets based on market price? The idea is not basing on market price. Nedbank is not basing on market price. Why should Safaricom be based on market price? Then you lose up value. I think when we say these things, it's not politics. It is about Kenya getting an extra 150 billion to build more roads to prosper Kenya and our systems. The very last thing I want to announce to all of you here is my brothers and sisters. What we did in Keharu in terms of launching a program of learners paying 500 shillings per term. It is the journey towards totally free basic education in Kenya. And we are going to make it happen. And we want to start with day secondary schools. And I'm not throwing this to anyone to do it. I will also be part of doing it. And I'm requesting a very simple formula. Instead of me doing this program in Keharu, and another one doing it in their constituency, and the discrepancies between this and the other one in terms of constituencies, my proposal is simple. And we'll do it, and I can assure you, I'll be the champion of this until it is done. CDF at Nairobi level, even before it comes to Keharu, every constituency must be cut 30 million Kenya shillings, which will amount to 10 billion Kenya shillings nationally. We put that money into a kitty we are going to call day secondary school kitty. The governors in the equitable share to also contribute 10 billion Kenya shillings. Even before it reaches, the treasury should deduct the 10 billion. The national government, and especially the Ministry of Education, to also rearrange their budget and raise an extra 10 billion Kenya shillings. We put that money into a kitty of day school. Kenya requires only 30 billion shillings to make day secondary school education free and totally free, including lunch. And Kenya must start that journey today, not tomorrow. We must never use basic education ever again as a tool anywhere in the election period. The day secondary school and basic education must be made free. And by the way, my goal is for us to have free basic education from term 2 of 2026. Because education, in all economic models, education is the #1 parameter of an economy, for economy to grow. It brings R&D, it brings technology, it brings about skills. We must make this available to all Kenyans. And I can guarantee you, whether I'll be alone as a member of parliament, I'll do it and it will happen. Thank you very much.
Mheshimiwa, kidogo. I think our seats feel very hot. You're making us feel like that investor that Madam Director was talking about when you feature the investment huku chini. Let me ask, do we have any question? We can take 2 questions. Okay, yeah? We can take 2 questions, then we can release him.
Wow, I can only say that. Let me stand. So first, I think as a trustee, it's kind of creating a disruption in my thinking on what risk is. Because I used to think infrastructure bonds were risk-free until you talked about Ghana. And then the question of passive versus ownership as a big principle. I think that's what I would say really landed with me. I think the question I have is, in this ownership journey, you've just taught us part of owning, we're actually owning the wrong things. How do we manage that risk of saying I own quells, I own these? How do trustees build their capability to truly own what they should be owning? Because there is that bigger risk of, yes, passive. I would rather passive because somebody else is doing it for me, rather than if I do that. The second one, and it's very quick, economic growth versus economic development. Yes. I think that's something you could tell us a little bit, because we think more growth rather than development. And my last thing is, who are you? Because entrepreneur, economist, member of parliament, actually, but who are you?
Anyone else? Can take one more question. Not from the media, just from the delegates. Anyone? It's not media time.
Hi, everyone. My name is Morgan Banda, representing the Coca-Cola Provident Fund. And Honorable Ndindi Nyoro, we really want to appreciate you. Some of us have grown knowing you, but now we are your close followers because of what you are really enlightening the economy. So my question is, what was the rationale behind your proposal that Safaricom be split into 3? I know from where you stand, you are opposed to the sale of Safaricom shares to Vodafone. But I just want to understand your logic. The CS for Treasury and Economic Planning yesterday was saying that he doesn't understand where you got your valuation. Yet, I think we have just done some valuation here, and I think from your point of view, it's like Safaricom is undervalued compared to other global players.
Thank you. Shimiwa.
Thank you very much. I'll be quick. My brother, please remind me your name.
My name is Paul Kasimu from Minet, but previously Safaricom.
I thought so. Thank you very much, Paul. In terms of ownership and the assurances, to call it that way, what we called risk before, I think it's now clear that there is nothing totally risk-free. It's nothing like that. It may take long, but it catches up with you. But on the other side, in terms of ownership, what I'm emphasizing on, the markets are not always the way they are. Let's underline that. So you may not call me here in the next 2 years and I say the same speech. Because the markets change. What do I mean? Currently, Kenya is very bearish. That's why for me, any company you are buying listed, majority of them are underpriced. Warren Buffett usually says that he does not look at share prices. Once he invests in a company, he doesn't care to look at the share price tomorrow or the next year, because he already made the right decision at the buying price, at the entry level. And always remember, you don't make profit at the point of sale. You make profit at the point of purchase. Any money you make, you don't make money because you are selling something. You make money because you got it cheap. So all I'm saying is that Kenya, if you compare the Kenyan market, Nigerian market, JSC, Johannesburg, and then you compare with non-listed companies, the listed companies in Kenya are grossly cheap. And the more the reason, just imagine, Paul, these are guys from Japan with sophisticated professionals. They want to buy a company in Kenya. They go to the market and the company is trading it today. That time it was cheaper. It went up after the announcement. But today, after going up, the share price is 244. But they are paying. They have committed to pay 590 for the same share. There are not two shares at Class A and B, same share that is trading at 244 in the market. Asahi is buying the same share of the market in quotes for 590. Then it shows you the shares in the market are grossly undervalued, and the people who hold big stakes meaning they don't hold to trade, those people can't sell at the market prices. And if you look at the banks in Kenya, you see NCBA is being bought at 1.4 to book value. There is no indigenous Kenyan bank trading above 1 to book value. This is what that jargon means. Banks you value at co-capital and the market valuation. So you either get a premium or a discount. So the base is usually 1. 1 is the book value. 1 is a figure. So if it goes below 1, it means it is trading at a discount. Equity Bank is 0.75. KCB is below 0.6. DTB is 0.32 to book value. But
NCBA is being bought at 1.4 to book value. It shows you Netbank. Netbank is a 1 trillion bank listed in the JSE. They are willing to pay like double price the last 6 months price of NCBA, double price. Because they know the market is not a true reflection of the value of NCBA or Safaricom or any other share. I hope you get that. In terms of ownership, Paul, what you're calling passive, you know what passive means? Passive is just like unleashing your cow to go and graze with the hope it will come back to you in the evening. Just hope. You've unleashed your cow. Hapa iende mtwapa iende wapi, no one is looking after it. With the hope, it knows home. So the person with the money now has here, I don't think I think they can go the step higher. Since you have the money, instead of owning companies number 1 to 20, you have 20 shares. You have 2 million for equity, 1.5 million shares for KCB. You have 2 million for Kenya Power, 500,000 for Kenyan. When you are eating everything, the buffet, it means you actually don't know your favorite food. Then if you grade your investment options from number 1, NSE has around 60 listed companies that are active. If you grade 30 of them from number 1 to 30, you grade them. This is number 1, like the one we graded today. You can clearly see out of the energy sector, which is number 1. And I don't need to tell you, you saw, you calculated yourself. So if you grade number 1 to 30, these are the best investments you have in Kenya. Paul, what would you be doing with number 23? Now you have nothing to do with number 8 even. You actually have nothing to do with number 7. Then with the top 3, ufukie hapo. Unless you have doubts about your capability to analyze. Economic growth, development, mostly growth is more broad. Development, we call it, it's more tangibles. Development is more tangibles. Building things, investing in programs, but growth is what manifests after development. Who am I? Me. but I can say I enjoy what I do in terms of leadership a lot, but I've seen, Paul, it is self-reinforcing. They feed into the other. I love the kind of discussions you're having. You forgive me, I've taken more time. I don't even know we have taken more time. Because I enjoy really this kind of discussions, even in the evening. Wado tutatafutana jioni tukae pahali tuongee tu mambo ya investments. For me, that is holiday, not swimming. So it is self-reinforcing. You realize in leadership, you also need this other knowledge about investments. But also in investments, you realize you also need to know the macros. So they are self-reinforcing, and actually each pivots the other. Morgan from Coke, Provident Fund. Thank you very much for the compliments. The reason for Safaricom spirit is simple for me. We have seen globally in many companies. When you have a company that has related segments, the total of the parts is usually more than the whole in terms of valuation. Remember, if you split it into 3, you'll have Safaricom as a telco, operating individually as a telco. Fintech, call it M-Pesa, it's already there. Actually, they operate almost the same way now. Fintech, which will be M-Pesa, you now unleash it to do business with everyone else in Africa. So they'll not be domiciled around their parent company. It will be a company now doing payments, doing cards, doing like Alipay. You now unleash it to do its own business singularly as a fintech. And then tower company, Kenya already has tower companies. Safaricom already leases some of the towers from other people. but they also have built so many towers on their own, just the same way they have done in Ethiopia. If you just let the tower company be, any other person who wants to host something on the Safaricom tower will be paying to be hosted. So the company will grow on its own by also leveraging on other customers, not just doing it specifically for Safaricom. But lastly, I had two options. That is one, splitting first. It may take time. The government needs money yesterday, as you can see the urgency. So the simpler one, to get more money within a shorter time, list Safaricom in the London Stock Exchange. It will not take you long. List it there. So people will come to know, so the owner of M-Pesa is called Safaricom, because M-Pesa is known more than Safaricom. So in this second option, there is no splitting. Just list the group in the LSC. So people will take note of Safaricom, companies, telcos, Orange, Etisalat, Bharti Airtel, any other will take note. After taking note, then announce an international bid for anyone interested in the 15% stake. Announce it to the public internationally. So you'll have guys competing. This one competing to buy for this price, this other one, this price. It has happened. I gave it on TV the other day, 2013. There was a company called Rea Vipingo. I had shares in that company, a few. So we bought at 27.5. Na sio story ya kusoma kwa kitabu, real. So after buying at 27.5, the owners of Vipingo, hii shapa iko hapa inaitwa Vipingo, it was part of it. It was a Saiso company. So the owners came and decided, we want to buy these guys out. Kampuni kwe yetu. So they gave us a bid of 40 bob. Me, I had some, I think 10,000 shares. So nilikuwa nafanya hesabu. So I bought it at 275,000. These guys want to pay us 400,000. So watuitishe namba ya M-Pesa watume haraka haraka. Because I thought that was very good. A 45% upside. But Chris Kirubi na Centum, wakaenda CMA, wakasema no way. By that time, Centum had like 1% of Rea Vipingo. Wakasema hata sisi ni shareholders. We also want to bid, to buy even you. Who wants to buy us? CMA wakakubali, the bid was opened. Centum put up a bid of 50 bob. Hey, I thought, honestly in my mind I was thinking, Chris Kirubi bana siache hii mambo mengi. Tupewe pesa mtu afunge zake. Within 2 weeks, some other guys put up a bid of 55. Then it became a bidding war. The long and short of it, after 2 months of bidding, we pocketed 85 bob for the share. So my 275,000, I pocketed 850,000 because of one thing, competitive bidding. So that's all we are asking. I don't think it is too much to ask. Even the guys in government, national treasury, it's not too much to ask. Put Safaricom's stake in an international bid, Kenya will get much more money. Thank you very much.
Asante sana. I think it is true that he's definitely a Kenyan. Mheshimiwa, kidogo tu. One last thing. It's true that he's an African, and Africa is his business, and he's mobilizing us as Africans to do business in Africa. Let me invite Madam Director. She has a gift for you, and thank you very much for gracing us with this, a lot of information and a lot of work for us. Sindio? Yeah, we have a lot to do. We definitely have to invest in Africa. Asante sana. Let's also clap. Let's clap. Yeah. Thank you very much. Asanteni. We are on course. I know we've taken some extra time, but that was worth it, yeah? That was definitely worth it. Let me ask us to rise and go and have a short break of 15 minutes. Short break, 15 or 10 minutes? Just have tea, kama umesimama, don't